All right, in today's vlog, we're going to talk about how much money do you need for a down payment to buy your first house? We get that question all the time. And the big answer is it depends. But guess what? It's more than likely a lot less than you're thinking. So here's the deal. There are different types of loan types. Think conventional, FHA, USDA, portfolio loans. We'll go through them all. But depending on what type of loan you need, and have, that's going to make a difference in how much money you need down. So let's start with the conventional loan. If you are having a conventional mortgage, more than likely you're going to need at least 5% down. So what does that mean? That means if you're buying a $300,000 house, you're going to need at least $15,000 down to get that mortgage, plus closing costs, et cetera, et cetera. So 3% conventional mortgage. Now, that's going to be the most expensive way to down payment wise to get a house. So what's a little more affordable way? Well, that's an FHA mortgage. The FHA, right, it's backed by the government. So there's some other fees and everything that's tacked on monthly. But to get into an FHA loan, you're only 3.5%. So again, you're $3,500 per 100K. So $200,000 house, you're bringing $7,000 to closing. The other fun part with the FHA is not only is it going to be a little less upfront with that down payment, but FHA also willing to take a little lower credit score. So if you've been having some credit fun over the last year or two, and credit score may not be quite as good as what you want it to be, FHA could still actually get you there. Final piece of the puzzle with these loans is what's called a USDA loan, right? So these are homes or loans that are going to be lent on homes that are a little bit more rural. Again, just like FHA, there's some sort of back-end fund. But if you hit the criteria with USDA loans, guess what? You're actually bringing 0% or $0 down if you want to be. So USDA loans, you can actually get into a house with 0% down. Now, fourth, let's talk a little bit about these portfolio loans. And what does that mean? That means that sometimes these banks or local lenders can work with a little magic, right? That say, an FHA or conventional loan can't because they don't have quite, they're making up their own rules per se. So what does that mean? Let's just talk about here in Greenville, South Carolina. There are a few banks that will do some pretty awesome mortgages for first-time home buyers. What does that mean? That means that they are going to actually have a program on the lending side where you can get into a house, you can have $0 down, you can have 0 PMI, right? So that means private mortgage insurance is done, and you actually can get a very decent rate in today's market. So I think 5.99, 6.25 with what's called a dream mortgage, right? So that's first-time home buyer looking to be in their first house, $0 down, great rate, no PMI. So to answer that question, how much money do you need to be able to buy a house from a down payment wise? Conventional, probably about 5%. FHA, 3.5%. If you're going USDA and you can make that happen, you're $0 down. And then also these awesome portfolio loans, you can definitely get into a house with $0 down. Now, again, that's the need. What do you want? That's sort of up to you. Obviously, the more that you're bringing to the table, the better your interest rate is going to be, right? The lower your monthly payment and all that good stuff. But as far as how much do I need? I'm a first-time home buyer, 25 years old. I'm paying $2,500 in rent. Maybe I don't have a ton of savings. There are options to get you in a home. That's all for today's daily vlog. We'll see what we got tomorrow. I think we're halfway through this, right? We'll see. Adios. Bye.